My name is Gabriel Sacks. I'm one of the co-managers of Aberdeen Asia Focus. The trust has an objective of delivering total return from a concentrated portfolio of high-quality, smaller companies in Asia ex-Japan. The first thing to say is that our positioning in China in the trust is around 10%. In addition, we have about 4% in Hong Kong, giving us about 14% to China and Hong Kong as a whole. This is pretty light relative to other Asian managers who tend to allocate about a quarter or a third of their portfolio to China. And it is quite light relative to the size of the Chinese economy and the fact that it is one of the largest stock markets in the region. With regard to our trip, we spent most of our time looking at small caps in the A-share market. For a bit of background, the A-share market is the domestic markets of Shanghai and Shenzhen in particular, which only started to get introduced to MSCI indices in 2018. So this is a market that had been quite closed off for foreigners and is still misunderstood, and coverage is still very poor. So that's really a very fertile ground for us to be looking for new ideas and for companies that are under the radar of many investors. The A-share market, despite being sort of closed off for many years, is actually the third largest stock exchange globally, just behind the New York Stock Exchange and NASDAQ. So again, there are many companies here for us to choose from. We spent a lot of time meeting industrial businesses and companies in the renewable space, and one of the most attractive businesses that we met with is a company called Shanghai Driveline, which does gears for electric vehicles and has over 50% market share in China. They're also expanding internationally with a factory in Hungary as European automakers look to outsource the gear manufacturing. The business has very attractive growth prospects, has been growing quite consistently and targets around 20% annual growth. They also have a robotics division, which they're looking to list in the next year or two. So we think that the outlook for growth is really great. We got a really good sense for the corporate culture at the firm, where I think they're very disciplined on profitability. They have very low levels of staff attrition and remunerate people based on stock options. So very private-oriented business. Quite encouragingly, lots of female employees on the factory floor, which is quite unusual for industrial-type businesses in emerging markets. So overall, we felt very excited about this company and introduced a 1% position in Asia Focus following the trip. It's a business that we have been following for some time, and that's covered by our colleagues in Shanghai. We actually have 10 people in Hong Kong and Shanghai, which help us cover our Chinese companies and new ideas in China. So it was also great during the trip to meet with our colleagues there. I think more broadly in terms of the overall economic outlook in China, obviously things are quite tough, but it is worth remembering that China is still growing. So if you look at official growth rates, the Chinese economy is still growing 4 to 5% year over year. And I think from a geopolitical perspective, which was probably one of the more sensitive areas in the past few years, there do seem to be a few green shoots following our trip or during our trip, which we took away. The US has clearly established some red lines for advanced technology exports into China. They've also released a sanctions list where US persons cannot invest in these companies in China. But beyond that, it seems that the US administration, or at least this administration, is not keen to take things too far beyond that point. There are two conflicts globally at the moment in Russia and Ukraine and the Middle East. I think both sides do want to reach a new equilibrium in terms of their relationship. So I think from that perspective, we came away a little bit positive, and speaking to the companies on the ground, they're actually seeing really good momentum from their international sales, which was good to hear. I think the other two key issues in China, aside from geopolitics, is really the property market, and the second one being a crisis of confidence in the consumer market. I think when it comes to property, the issues have been really well flagged. Our view is that the government has been introducing quite a lot of supportive measures for the property market and the economy. which will start to take effect. And actually in the Q3, you saw better than expected numbers from China. It will be a drawn-out process. The property market will take time to stabilize, but all you need is really some stabilization. You don't need to necessarily see a sharp rebound in the property market as the economy is shifting towards other areas such as advanced tech, semiconductor manufacturing, renewables, and green energy. So we're conscious that property is a tough spot for China, but also looking forward to the businesses that we can invest in other areas. The final point, which I think is really important, is the crisis of confidence within consumers in China. The good news there is that the consumer's in good shape. They have been saving a lot more and not taking on new borrowings, which is actually the exact opposite of what you see in the US. So there is potential for the consumer to rebound, but really you do need to see policymakers do more to support sort of animal spirits and in the economy and prevent China from spiraling into this sort of crisis of confidence scenario, which can be quite ugly. The only thing I'd also highlight during the trip at the company level is that we met one of our holdings called Chacha Foods. We met with the chairman there. We're told that this is the first meeting that the chairman has had one-on-one with investors, which again goes to show the good relationship we have with companies on the ground and the level of engagement we have with management teams. He is the founder and has been leading the company for many years, so we touched a lot on management succession, softer issues around management compensation, strategy, and also covered some of the tougher conversations around issues that they've had with supply chain management and softer growth this year. But we came away very encouraged about what they're doing and what they're trying to create with their strong brand in the consumer space in China. So at this point, we don't think we need to do too much more to our China positioning aside from that new holding in Shanghai and Driveline. Thank you very much for listening. I hope you enjoyed the update. And if you'd like any further information, please visit our website or click in the link on the screen.